The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here, and I guess I didn't resolve the problem I thought I'd resolved. We're getting an echo, but that's okay. I'll deal with it. So the Dow's down 41 at 26,095. Stuck right there. Look at this. The 9-period exponential moving average is the base, and the resistance right there. I'm clicking on it. 26,151 is the resistance. Today stuck a little higher, it's been to 26,160. We'll see, because this is I consider this could be a digestive day, and then there should be another attempt, because the pattern that we're looking at here is, okay, I'm going to talk about the pattern because tomorrow I'm doing a webinar on what we're looking at in this market, what stocks and sectors are appealing in the sense that they've come down very sharply, or maybe there's certain ones that have held really well and are still looking good. So it's going to be very pragmatic and very comprehensive. But 1 hour look at the markets tomorrow at 5 o'clock for subscribers. You can become a subscriber. You join. It's money back guarantee for the month. And I think that it's going to be worth it because we've had some really nice entries. We still short down from 7 points off the top. Still got a little position there on the short side, although it's 200% short, still the small position that we had. We've taken profits on the way down. I am anticipating that this pattern right here, the lowercase h that goes to a lowercase f, is going to be the format making the 25,000s really important support. Just do a 25,400 to 25,000. Breaking up, I hope not. And in the meantime, back at the ranch, what we want to look at is the 200-period moving average is 5,856. We've hit it so many times in the past couple of weeks that it has to be some kind of support. A break and a close under that says, further digestive action is going to happen. Now, I had a coincidence today at my fitness center. Direct there, we wave hi and all that stuff. We never really chat. All of a sudden, he's busy working with a client, and he says, he shouts across the hall. He said, "So, what should we be doing about this rate inversion?" So I look at him, and I thought, "Geez, I said to him, when the general public starts to talk about it, we're done for the moment. It's just not an issue right now." And that's kind of how I feel, because that meeting, they went on the whole weekend, from Friday, Thursday to Friday, going on and on and on about stuff that's reported that I didn't have a clue about. Just said to me, you know what? It's a climax of sorts. The market should respond positively, at least for a little while. And that's kind of where we are. There'll be a new crisis coming up fairly soon. But in the meantime, I think the market is trying to stabilize. It's trying to show us, and that's what I'll talk about tomorrow, what's starting to work and support, what's starting to lead, and what's just failing miserably. And are there sectors that are actually looking quite intriguing right now for the very first time? Sectors that weren't participating at all. So let's run the numbers. The Dow weekly chart remains, the Dow daily's in a sell mode. On Friday, the weekly chart went from an immediate sell signal to an immediate upgrade to a sell mode. Why? Closed sharply below the 40-period moving average. MACD turned negative. Stochastic dropped very sharply below 80%. And right now, the stochastic weekly is 60%. MACD, look at the distance between the green line, the faster moving average, the 9-point differential, and the slow red line. That's going to take a while to repair. It doesn't mean to say you have to go smash to the downside. It just said it's going to take a little while to repair. At least another couple of weeks. That's the way I'm looking at it. Next we're looking at here is in the S&P. Pretty much the same thing. It's a little bit better because it's already above the 40 moving average. The MACD did cross negative. Let me just do this little circle here so you can see what I'm talking about right there. The stochastic is now at 66%, way below 80%. So that's saying, yeah, here as well, needs a little more time. It's a little bit better pattern. I did put a down arrow here. I should have everything, all the criteria were met. I'm doing it now, even though this is only Tuesday and it's a new week. All I can say is if there's a new high in the Dow above the 27,391 area, 97 area, that's going to be a big positive and probably start to buy signal and buying, at least a buy signal in the chart. In the S&P above 3,057, that would be very positive. I'd have to say I prefer 3,031. Feel a little bit more comfortable about that. And the other thing that's really important is if you look at the Qs, which have held really well, that weekly chart, I have put it down arrow because all the criteria were, but it is actually holding pretty darn well. So I might have jumped the gun here by putting it, instead of putting that red plus sign, to say, oh, be careful. But that daily chart, 195 down to the 189s, a pretty big move for a short-term pullback. And now that is rallying, we need to see 190, 189, 192.60 by about Wednesday or Thursday, and then I'll say, hey, that would be very good. Now let's do something else. I wanted to show you that in the gold contract, look at that rectangle formation. Remember, I took the outer lines of this long-legged doji candle of the 13th of August, not 100% doji, but I'm calling it doji, of 1546.1 on the upside and 14.88 on the downside. And that said to me, I could immediately draw a rectangle formation and say there's a good chance that gold is going to remain in this range, that if it broke to the upside, it'd probably come back into the range. And if it broke to the downside, it would make the middle of the range at 15.14, about where we are now, strong resistance, and suggests a chance that on the shorter term, gold is going to make slightly lower lows and slightly lower highs. Now, when I'm looking at the MACD pulling back like this, it hasn't crossed negative yet. I think it's going to try to do that, but it hasn't done it. Stochastic is still good at 82% the other day, though. It was up at about 87%, which is very good. This is still good, but I'd prefer to see a little higher. It starts to go to the 76 level with gold going underneath that 1488 level. Now I'm going to say, okay, now gold has some kind of a short-term top, and that leg D in the daily is probably going to make a peak by Friday. There's no big bounce in the interim period. So I'm a little cautious on gold. For my webinar tomorrow, I will include a little section on gold and the gold stocks and tell you what I'd be looking at if there was a pullback, where entry points in certain of the gold stocks and gold will be. We'll do that in great detail tomorrow for one of the segments. Now the silver contract, silver is trading right now at 17.11. It is also in this range, and the range is from 17, just under, I think it. Yeah, 17.49, the high of the continuous contract on the 13th of August, and the low was 16.51. That's your range. I can make it a smaller range just for now, and I'll say on the upside, if you break down, get about 1737, and a back will start underneath 1670. I'll be right back. Basil Chapman, Basil Chapman, S&P's on 5.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. Oh, so the gist of the story wasn't that the director of the fitness center called out to me, but I just had a call about 10, 15 minutes before my show from a very good friend, and we never really discussed these things. Out of the blue to say, I've been reading the economists, he's been reading the economists all his life. And he said, I'm really worried about the yield inversion. I want to pull everything out. He's really got much real estate because there's money in stocks. So I talked to him about it. And I said, you got to do what you're comfortable with. You got to feel, that you're comfortable. And if the market goes up at some point, it's come back to these levels. It's not like, anybody has the whole grail. I say, but you got to feel comfortable. But I personally think that we haven't even got started on the up move because I have to hear people talking about it. I've been in the market long enough to know that at some point, when the market is going up, everybody starts to talk about it and to talk and brag about how much money they just made on whatever stock. We don't even have sexy stock. You see what Beyond is doing. BYND probably bouncing today. It bounces up 10. Woohoo! Finally, Beyond gone from 239. But it was down in the, what was it? IPO was what? I forgot to tell you that. IPO was back in the 49.50 area, screams to 239 PE in the cap wave methodology, comes plummeting down the arch in the inverted V-shaped formation, just takes out the left side low of the 25th of June at 138, and 38.34, goes to a low yesterday of 136.27. That's a nice move, 136, 162, that's almost 30 points. Yeah, I think it might be back in play at a certain point. But how many stocks are there like that? I don't see anybody walking around saying, "Oh, Twitter, is unbelievable! Oh my God, my Amazon." People are not talking like that at all, and that to me is the sign of a market top. We haven't got there, haven't got even close. This is the most silent, quiet market I've at all time highs that I've ever come across. And what I said to you is. I still think that people would like to do a little showing off, but they show off by buying, wherever, the Northeast wherever you go, you're looking at Alfa Romeos, you're looking at cars that people never bought before, spending a bundle of money to buy this fancy car to go to Whole Foods for the stock market. I said, what? I just see this all over the show. People are showing off what they got, but they're not talking about the stock market. So I think we still have to go through that phase. And I said, TRUMP, 5-letter word, and stock is 1, 2, 3, 4, 5. Stock is a 5-letter word. Nobody wants to say the two things in the same breath because you get into a confrontation. People look at your fund. So I think that's a big part of it. Let's see if that changes. And the other thing that I spoke about is the hubris that Trump has kind of claimed that the market is his. It's not a good thing to do. It's just not a market is bigger than any one person. It isn't bigger. It is a magnitude of maybe a million bigger than any person could ever think. So that makes me a little nervous. All right, back at the branch, where are we? We're looking at the TLT, which are the bonds, even 20 on $1.06. Oh, let me just do this, get it out the way. All since in one of his kind of dig-in missives says, Germany just issued a 0% 30-year bond. I'm sure you won't talk about this in your show because you are, every day says this, you are a pom-pom waver. Now, I've spent more hours just writing up my report, not even studying the market or practicing or trading, than you have your entire life in maybe 2 weeks. So I don't expect that from you. I'm not a pom-pom waver. I've always said exactly what I'm looking at. So just get rid of that expression because it just does not apply to me. What I am saying is that I'm still a mega bull. You think that's pom-pom waving, and I don't know what your definition of a pom-pom is. But at the same time, I'm very realistic. So that has to come out of your vernacular, if you know what the word means, and we'll see. We'll go from there. So 148.60 is the high of the PE just 4 days ago. It drops to the 143s, but now it's back at 145.07. But I think there will be a PT. I think that bonds are getting a little tougher right here. I think they're going to pull back. The TNX, which is the 10-year yield, TXN.X. There we go. NX, is it? Texas Instruments. No, TXN. Woohoo. TXN.X. TNX, there we go. 15.56, down 42 cents. And I believe this is going to be a new A, B, C, D. This is a trough D, and in the daily, and I suspect that what we're really looking at is that it's an international situation. I'm trying to explain to my friend that low yields right now for the United States is because of Amazon competition for all the other stores. So America is being pressured by international countries around the world for lower rates. I said about 3-4 years ago that I can't understand why the Fed is raising rates just like a quarter point here and a quarter point there to get back to normalcy so that people are building and doing stuff. It represents a very good economic structure in that people are paying to get that kind of a loan because they want to put the buildings up. They're prepared to pay. This is different. So you've got interest rates being forced lower by international mechanism. It is not the U.S. at this particular time. I think it's going to be later on, maybe 2020. But at this particular point, I think it is the vernacular. It is the whole aura of the tidal wave of low rates, the competition for the lowest rate, competition of governments trying to fund all these big projects everybody's doing big projects that might be grumbling about the economy. But, wherever you go, you care about infrastructure, bridges, they're doing stuff. And that means that they are pushing their bonds out, and therefore rates are low. So this is the situation that we're looking at. So I'm suspecting that yields are going to rally a little bit to 15.56, 1.556. I wouldn't be surprised if there's a bit of a bounce towards the 14 average The 9 is 1.625, and the 14-period moving average daily is 1.684. I wouldn't be surprised if it gets something like that. So you've got to have admiration for a company like a Walmart, just points off its all-time high, going head-to-head with Amazon in uh, their own rhythm, that is their own accommodating for money that has to be transferred from other places, from areas, into that whole internet sphere. It must be costing them a bundle, but they managed to make it work. Bravo for them to be able to do this. And if they can go from 116, they're at 112 right now, over the next weeks, that would be really good. Better hold 100 and 100. I'll be right back. Basil Chapman, Tiger Conditions Hour. Break coming up.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. And just answering Dan a question about if you've been holding XLU for some time, how will you treat and wear longer term here? I like it. Just hold it right now. I'll get to it. We've got Mike in Ormond Beach I want to go to right now. We're going to be back there in a moment. Mike, how are you? I saw the message, just answered right away. How are you doing?
Oh, pretty good, Basil. Basil, I got a question about this bounce that we're having right now. And I don't know if you've already covered this or not, but do you see in the Dow that we could get up to the 50-period exponential moving average? I've got it on my chart as 26,402. And I also look at the YM, the Dow futures chart also. And what's your opinion?
Okay, so your question is, in this, what I'm calling a bounce, it might not be a bounce. It might actually turn out that that was a low at 25,339, but so far all the technicals suggesting there's going to be more time at least needed before we can really get going on the upside. So Mike, I'm going to say you're talking about the 50-period moving average nearing 26,400. I think that we can get to, the big question for me is, how do we break 26,200 to the 26,350? Yeah, it sure get there. But if it gets there and it starts to hold for about 3 to 5 sessions without breaking back below 26,200, I have to consider that a great deal of the work has been done, and that the low that we saw of 25,339, it's going to take a lot of batteries to go back down there in this particular phase right now. So the answer that I have to give you is, let me just go to my automated chapter wave. I'd like to just check that out for a moment because it changes overnight sometimes. Yeah, 26, wow, way up the 26,800 area, and the daily is resistance, but it's the 120-minute chart that's suggesting to me that the 26,311 to 26,500, that's going to be the next area of resistance. So, to answer the question, the fact that, now, one of the things that I've spoken about for a long, long time is that the Dow Mix is one of the best that I've seen in decades and decades, even though I do think they've got maybe financial extra that they shouldn't have. But look, today the Dow should actually be down, instead of down 26, it should probably be down about 58 to 68 points right now, even with a little bounce. But look at this, Home Depot in the Dow, never used to be, but now it's in the Dow, beautiful up of 9.5 points, up 217. So that's the reason why I'm saying I think there's a chance that we start to use more time than price. For just personal aspect is that I'm a little upset that I didn't actually take a long position, even holding a short position from the all-time high, just to have a short position in the diamonds, just the DIA. And I should have said that if the Dow goes one more time below 25,430, at least take a little bit of a position. Why? Because we're right in the middle, and there's a chance that if there is a big enough breakout, I might have to, for the first time, actually chase them to the upside. I'm hoping that doesn't happen because everything about it says we should be testing the 26,000, 25,800 for the 200 moving averages at some point in August. That's kind of the way I'm looking at number one. Number two is, in the picture, I'd been expecting, as you know, that the candle of August would give me a peak C in the monthly chart. It was a fantastic 9-month distance between the January high of 26,616, January 2018, sharp pullback, rallied slightly higher, 26,951 in October for 9 months. Then a big pullback in December to 21,712, and then a 9-month rally to the all-time high of 27,390. Was it 27,000 under 27,400 in the last up? And now we're in this consolidation phase, and everything about what I'm looking at suggests that the consolidation phase should last a little longer. Am I answering your question?
Yeah. Yeah, so I don't know if it's on my phone or, but the audio is coming through kind of raspy. So I'm going to listen to this archive tonight when I get home from work. And thanks again for everything you do for us, Basil.
Mike, just as you're about to go, let me just say there is resistance at the 26,300s. And there is support in the 26,000 to 25,800 level in the shorter term. That's what you got to keep in mind.
Okay. Well, thank you very much.
Thank you for calling. So, folks, I don't know about that rest sound. You know, I thought I'd resolved all the problems. You know, when you switch from a new system, actually 2 new systems, Sometimes you've got to upgrade, and it takes a little while to get everything back again. So I'll have to start working out what to do in terms of the sound. It might be my problem. I'm not sure. I'll speak to my engineer about it. But if it is, I can't spend too much time in the next 2 days. I've got my webinar coming up. I'll try to fix it. But by the end of the week, I'll have it all organized. So let me just do this while we talk about it. The VIX index, VIX.X, the VIX index is trading at 1666. In a matter of days, we've gone from the 24s to the 16s. The Dow has had a really good rally. The S&P's had a very good rally. The index 100 QQQ series, also very good rally. Here comes the big test. Is the VIX index now to start traveling into the 15s and maybe the 14s to get an even greater push to the upside? You know, the more I looked at charts last night, getting ready for my webinar tomorrow night at 5, remember you can join in. We've got positions that we've started looking at. I'm trying to do two things at once. I'm trying to find low price or whatever price it is. But I am trying to find some low price stocks that give a good dividend, that seem to be safe. I know you can never tell when they give too much of a dividend. I'm trying to find those, talk about them tomorrow night. I'm also trying to find stocks that have been beaten down that are really great American companies that should start to rally well, but they also give a nice dividend at the same time, because I believe very strongly that you want to get capital gain as well as dividend. I don't want to have a dividend that comes in at 6% or 5% or 4% and a darn stock drops 15%. That's capital loss. I mean, there are some people who are very comfortable about that. I'm not interested in that. Subscribers, maybe personally, occasionally I might happen to do that. But that's just not what I want to use. So that makes it a very specific webinar tomorrow night. The other thing that I'm looking at is, so this wasn't what I was about, but Austin, the end of X, see, this is the S&P Utility Spider Fund. And it's had a spectacular move. Basically, the candles that have made peaks have been for a month. In a monthly chart, you go from the low that was made in February of 2018 at 47.37. And look at this. You go to a peak A in April of 2018, and then for 1 month is a slightly lower high. And then it makes a new high the next month. Two stars, leg B, leg B. That actually makes a peak. Peak B was a month, and then you went to leg C. A month, and you went to leg B. That was a fractional low last month. Go off the peak, and now you're leg E. That's a pretty strong action. That's the utilities. I'll be right back. Basil Chapman.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the Gold Report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So just to say, this XLU has got this pattern that I call really a Chapman wave 1-to-1 propeller shaft move. You see the way the low back at 57, right here, on the 31st of May, goes to 57.74. Then it rallies up sharply to the 61.19 level on the 7th, pulls back again very sharply. That outlines the rectangle, goes slightly higher to the peak D on 20th of June at 61.38, comes back again and starts to test the low. Then it remains in this pattern for weeks. And finally, it breaks out 3 days ago. It goes to 61.57, and yesterday's high was 61.98. Today, so far, the high is 61.92. So that suggests that there should be a little bit more of a bounce. It should go to 62.55, maybe even the 62.55 area in this particular move. And then you could start to see a pullback back into the range. Now, for those of you get my subscribe to my newsletter, you'll know that the stock I featured yesterday, which we were fortunate enough to get, a dividend stock, had exactly the same pattern to the downside, the 1-to-1 propeller shaft. And that's the reason why I said this looks good. It should have a very nice rally. It's a dividend stock. We know exactly the parameters to look at. We'll have a stop if it starts to rally, that starts to cover. It's a very big dividend, but I believe the stock is a good stock, and that's really important. That's the reason why I said in the advertising that to get my newsletter now before the webinar is important, because every day we're starting to look at building some kind of a portfolio that has a chance for this next move, if I'm correct about the next move, starting with sideways consolidation, maybe a couple of dips lower, and then basically trying to start to the upside again. We'll see what happens there. So this covers that particular XLU, and it's only a leg B right now, so it should go a little bit higher. I don't think it's an alternative count E. This is really everything to say it's a B. And the other question I had was, Basil, where do you see strong support for the QQQ, the Dow? So I've spoken about the Dow. Let's go to the QQQ, the NX 100 trading vehicle. The 200-period moving average of 180. Well, it had a big spiral to the upside, actually, at 179 2 weeks ago. And then it bounced. So 191, just that whole 191 area is going to be strong resistance. If it closes sharply about 190, 150, I would consider that maybe the low that was made back on August, is that the 5th, 7th? August the 5th at 179.20. Let me just put that in. 179.20, and that was 885. Maybe the whole area is going to be very strong support. So let me just say that have I got time? Yes, I have. Okay, QQQ, watch this. Amazon, Amazon right now is trading -5. It's just been stuck in it has not had the bounce down the S&P had or the Qs. And this is a really important stock. Amazon is trading way below the 2035.80 high. It's at 1810. All right. What about Apple? Apple is holding quite nicely. It's up 2.37 to 12.72 today. It's still way below the 233.47 October high, but it is holding well, and it's in that rectangle. It's gone back into the rectangle. I'm actually going to make the rectangle a little higher because I want to do this to be able to give you a cogent aspect of what generates the support in QQQs. Look at Netflix, NFLX. Netflix is trading right now down 9. I just think this is a loss. I don't see anything in Netflix. Haven't for a long time. And we've got Google. Google is Google Alphabet. I've got the actual shares, the Google shares, A shares or B shares, whatever it is. And it's trading at 1,190. All-time high was 1263 back in 2018, dropped to the 900, spiraled up to 1200, to 190. It's just stuck. Look, there's nothing here, nothing you can see. It's the short term. And that's it. That the Qs are going to be a very big clue. I'll XLK in a moment. But the Qs are telling me that this rally needs more time. Look, you've got the stochastic right now within a fraction of plus and positive. It hasn't even gone above the high that was made on the 13th of 189.08. So right now, I think that this consolidation, I think I'm accurate in saying there's a consolidation going on, and just be further testing of the close to the lows. That's the way I'm going to have to leave it just for now. I don't want to run out of time. But to answer it, the 181 to 177 area, I'm not saying any particular number, that area is going to be key for the Qs, because if it breaks, closes at 179, that weekly chart is going to stay lousy. That's going to mean you've got a move A to B, B to C, and now you've got your C to D in that parallel move, and that's 191 to 191 down to 181, 10 points. So 10 points below the high, all-time high that was made at 195.55 is 185. So come on, right? I did something wrong. That was 160. Oh, I know I did something wrong. So I call it 170. So a 20-point move to the downside from 195 to 175. There you are. So this. There could be that move. Let me do it in visual terms. This move down could be replicated in the weekly chart, and I'm inclined to think that these weekly charts are suggesting that we cannot get too carried away on the upside, that there really is no downside action to be done, and that says 173. That would be a one-to-one move to the downside in the Chapman wave, parallel one-to-one extension. In other words, the same angle would take you to the week of the August the 30th before you can actually make some kind of low. 1st of September, that week, the first week of September, last week of August, before it actually makes a low. I'm not saying that could happen. I'm saying that's the pattern that I'm looking at right now in answer to the question. Now, if you don't feel impatient that this is going to get away from you and never get another chance. I think, in fact, this is one of those times you need to have some patience. Now, I'm going to suggest, in any case, whatever happens, don't just put all your eggs into the market. You're going to be plenty of massive pullbacks to come. That's part of the character of this market. So you could nibble right now if you feel that you need to be in. You don't want to miss a move to the upside. Answer to the question is, you could nibble right now, just start a position, and then you could layer in on the downside. Why? Because if there is a move to the upside, at least you've got your foot in the door. You already have other positions, but this is in the door for a new position, and then we might be able to add, because that magnet crosses positively in the QQ, and the stochastic is lousy at 39%. I want the stochastic to be much higher. So I don't get carried away, but if you feel that you need to get in, I would prefer that you just get a little position, saying it's a starter position of a whole new bag of position, a tranche. Your little first tranche goes in, the next one comes the next opportunity. I feel safer that way. I do think that this is not the kind of, I don't see it just yet, that this is the kind of explosive up we've had. We had the one in December, we had a milder one in June, and I think this is a milder one. We have to consolidate before stars get ready. I hope I'm clear about that. Could be wrong. It's crazy because we have, what, 7 long positions and 1 short position, which is the down. So I'm kind of not in that position. I'm just saying that I'd be looking at in terms of your overall bag of tricks. If you want to put money to work,
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Just in the Chapman methodology, we're looking at the 2-minute chart. The objective is to go from a low identifiable low bar that gives you a buy signal to buy mode. 2-minute chart earlier on, oops, that's the wrong way, has had, since the low was made back to about 950 in the 2904 area, it had a peak, D pulls back, went to a D, but then had a little extra to an E, pulled back sharp in the 2924 area, pulled back to 2913, has another, I put the arrow upside down just a moment ago, has another EPE and has pulled back there. I would just make it real clear that the E-mini at 2917 starts to trade for my subscribers, and I said, if the Dow was down minus 40 off 130, it suggests that there's a two-day consolidation underway. And the S&P, if it's down more than about, I'd say if it's down more than 7 or 8 points at 130, it says, yeah, you could have some visit to the close as a digestive phase going. So let's just go back here. I want to show you a couple of things. I mentioned the TLT. The TLT is suggesting that the high was made at 48.60. It might be retested because the bank is still good. The Catholic still at 84%. But I think we're real close to seeing some kind of a pullback in the bonds. But it's only minor. That pressure from internationally with yields going down, it's just forced the United States to continue to do this thing. What choice do they have? Under other conditions, absolutely, the yields should be way higher. It should be a fight to be able to get the rate right now because you get building up in such and such a time. That doesn't happen. This is a very different environment to what many people. I speak to people who've been in the market forever. I mean, people in their late 70s, early 80s, just to a person said, "I've never seen anything like this, and I've been in the market all my life." Yeah, it is different. It's not that you're saying, "Oh, it's different now," because and then everybody says, "Oh, yeah, it's one of those famous expressions." But, we're trying to go on for my webinar tomorrow night. We already have a stock that's up. From the buy that we made just 2 days ago, we have 2 stocks that we just entered, and they're up nicely, and both they give a dividend. I'm trying to be as selective as possible. I'll talk about it in great detail tomorrow night, my webinar, 5 o'clock. Go to the front page of TFNN. Check it out. It's a webinar that I think is pretty pragmatic. Kevin Music, going to Steve Rhodes, Dave White, Tom Bryan. I'll be back later on. Have a great day.